It's that time of the year again. We get to look at what super investors have been buying and selling. Now, as I said every single time I make these types of videos, we don't know the reason why they buy, we don't know the reason why they sell. Sometimes there's a pattern. For example, if you sell American companies and then you buy only Chinese one, then you can probably conclude that they think that America is expensive, China is cheap, so they see value there and they buy those companies. We've seen that 3 months ago with a couple of those super investors. So let's go over most of them in this video. Usually I do this in 2 parts, but today you're lucky. This is going to be one single long video. So yeah, like, subscribe, do all of that. Do share your thoughts down in the comment section below. Do you think these moves make sense? Yes or no? There are some companies that I've never heard of. So, okay, always nice to learn new things. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So we're going to start with the Bill and Melinda Gates Foundation because it's the easiest one to go over. There's not much activity other than, well, the fact they reduced their position of Microsoft by 17%. Last quarter, that was 4.4%. So yeah, it's still the biggest position for them, but they've been reducing that position quite a lot. Also reduced Berkshire Hathaway by 10%, Waste Management by 8.5%. He did buy this new company here, Paccar, not that much to be honest. I mean, it's 0.22% of the portfolio. Then he added to FedEx around 65.17%. For those that don't know, he has 24 positions in the portfolio, a portfolio worth over $45 billion. The number one is Microsoft, number 2 is Berkshire Hathaway, and number 3 is Waste Management. And as you can see, he reduced his shares in all of these companies. Moving to super investor number 2, that's Bill Ackman from Pershing Square Capital. We already knew probably what was going to happen. So last quarter, he initiated a position in Nike and in Brookfield Corp. And in this quarter, he basically added way more shares. So he basically increased Nike's position by 435.5% and Brookfield Corp by 377.5%. He did reduce a little bit when it comes to Canadian Pacific Kansas City and Restaurant Brands International, and then 17.6% in Hilton. That's the reduction. He did open a new position this quarter in Seaport Entertainment Group. More on that in just a second. If we look at his portfolio, he has 10 positions and the portfolio is valued close to $13 billion. Now, you will probably be shocked. Oh, Google, I thought Google is a bigger position for him. Well, he's got both of the tickers. So if you add them up, it's still the largest position. Then it's Brookfield, Hilton, Chipotle, Restaurant Brands International, and all the rest. Nike is already 11.15% of the portfolio. Now, what does Seaport Entertainment Group do? Well, according to Google, it's a premier entertainment and hospitality company formed to own, operate, and develop a unique collection of assets positioned at the intersection of entertainment and real estate. Maybe something like Vichy could be an example or an equivalent, I think. I mean, this is the first name that popped in my head, so I don't know, maybe I'm completely wrong, but does feel like it, right? Seaport Entertainment Group is redefining entertainment with unparalleled experiences in hospitality, restaurants, sports, retail, and beyond. It's a pretty small company and a company that has only gone public back here in July. It has a market cap of close to $350 million. Moving on to Chuck Akre from Akre Capital Management. So here we've got a little bit more activity. So in Q2, he opened a position in Airbnb, as you can see right here. And in this quarter, he basically added way more. So 183% increase in Airbnb. For the rest here, he added a little bit to CCC Intelligent Solutions, Sophia Genetics, Brookfield Corp 2.5%, and then CoStar Group, he added just 1.87%. For the rest, he reduced the positions in, well, the big names that you should know is probably American Tower Corp, small reduction, MasterCard close to 3%, Berkshire Hathaway 3.9%, Moody's, I did not see this one coming. So Moody's reduced that position by 20.33%. Okay, CarMax close to 40%, and then he completely sold out of this company right here, SBA Communications. Looking at his overall portfolio, he has 18 stocks and it's a portfolio that's worth close to $12 billion. Number one position is MasterCard. Number two is Moody's. That's why I was a bit surprised to see a reduction of 20%, but okay. Number 3 is KKR, and 4 is American Tower Corp. Now, so far, to be honest, I'm not that surprised with not that surprised. It's not like I'm, shocked that they sold something or bought something. No, it's one of those moves where, okay, maybe they like this company's valuation more, maybe they like the business model more than before. So they add, they sell, they add and sell. As you can see, they are still quite active, right? Despite having a portfolio worth billions of dollars, you can see they're making quite a lot of moves. And I mean, this one, the next one, Daniel Loeb from Third Point, you can see that, well, he's been making quite a lot of moves in Q3. We're not going to go over all of them, but this is a portfolio and a guy that does a lot of moves each and every quarter, as you can clearly see in the last couple of quarters. So in Q3, let's go over the big moves here. So Live Nation got increased by 71%. He did buy the following companies. So the big ones here, Brookfield, this is a name that we keep on seeing over and over again. Lots of value and attention towards that company, which makes sense because it's an amazing company to own. Then he did buy, and this is one of the few super investors that I've seen that has now a position in Tesla. Previously, I think only 2 I saw, and those I don't really consider them as super investors, but okay, I could only find 2 folks with Tesla in their portfolio here. But okay, you open the position, 400,000 shares. It's a tiny position, all things considered, but it's nice to see that finally someone with a big portfolio actually opens a position in Tesla. It's probably up by quite a lot right now. CVS Health, you open a position in that as well. And then the reduction from the big companies here, we got a reduction of 12.10% for Taiwan Semiconductors, 27.45% of Amazon, close to 30% of Vistra. I am yet to make a video about that, but I'll make it for sure in the next couple of days. Microsoft, close to 45% reduction. Meta reduced by 50%. Apple reduced by 52%. Then Alphabet completely sold out of that position. Verizon completely out of that. Uber out of that as well. ASML is out of that. MSCI out of that. Micron, Advanced Auto Parts. So yes, some big moves in this portfolio of Daniel Loeb. At Third Point, he has 41 positions in the portfolio, and it's a portfolio worth around $7.3 billion. The top positions are PG&E, 13.35%, then Amazon, Danaher Corp, Vistra, Bath and Body Works. To be honest, I don't know what they see in that company, but okay. And then you've got Microsoft and all the rest. So yeah, interesting news. This is a portfolio where I'm like, okay, interesting. You sold most of your big tech, right? If not completely sold out, a huge reduction. So maybe he thinks it is too expensive right now, or maybe because of elections. Because remember, this is from 3 months ago. We only see what happens in the past, not what they're doing already right now. Maybe because of the elections or something, they wanted to take risk off the table. Maybe by now they have already added some more. Who knows? I guess we'll know in 3 months. Moving on here to David Tepper of Appaloosa Management. Remember, I made a video about that after he went on CNBC, I believe, and talked about China, how we should just buy everything China, right? Because China was going to stimulate the economy, etc., etc. So he basically said, buy everything. Well, did he buy everything or did he not? So let's have a look at what he did. He did add 173% to Pinduoduo. He added close to 100% to Lyft, 69.35% to JD, which reported earnings on Thursday, added 4.32% to KE Holdings, which is also a Chinese company. So right now, 3 Chinese companies he added and bought shares. He opened a new position in Vistra, NRG Energy, Las Vegas Sands, which is basically casinos, and then another casino is Wynn Resorts. And then if you look at the position that he reduced, again here Alphabet, Qualcomm, etc., but let's find the Chinese ones. So he reduced Alibaba by 4.76%. Okay, so he didn't buy everything. So one Chinese stock gone. Then let's see if we can see some other Chinese stocks. By the way, he sold shares of Uber, Amazon, Lam Research, Nvidia, Intel, Micron, ASML, TSMC, and what do we have here? Baidu. Reduced that position by 14.41%. Oh, what is this? iShares China Large Cap ETF, reduced that by close to 16%. Then KWEB here also reduced that by 16.15%. So, clearly this was not a buy everything type of quarter for Mr. Tepper. Looking at the other moves here, he reduced AMD, Microsoft, Oracle, FedEx, Meta, Adobe, UPS, Boeing, and Macy's completely sold out of the last three. Now, if we look at the top holdings of the portfolio, Alibaba is still the number one holding, which again, this is where I need to hear the guy explain himself, because you go on TV and you talk about China, you will buy everything, etc., etc. But then Alibaba being your number one position, you don't increase that. While you increase the others, right? You increase JD, you increase Pinduoduo, which is the number two position. So yeah, I want to know why. I want to know the thinking behind that. Are you less bullish now on Alibaba? And if that's the case, why is it still your number one position, right? You understand what I'm trying to say here? Either you're super bullish and that's why it's your number one position in your portfolio, then you should maybe have added to the stock. I don't know. You shouldn't have sold. That's what I'm trying to say here. So yeah, I don't know. I would love to see him back on the panel there and explain the moves. So we've got Alibaba, Pinduoduo, Amazon, Microsoft, Meta, Google, JD, Oracle, Lyft. Those are, I would say, I think the top 10 or something like that. And this is a portfolio with 38 stocks and a value of $6.7 billion. Moving on to the next one here, Oaktree Capital Management, Howard Marks. So here as well, plenty of activity. And here, this is a portfolio where, well, the names are not that famous, to be honest. Yes, he did buy Alibaba and increase that position by 83.33%. Then all the rest are names from, I believe, Latin America, South America. He did open a new position in Yum China Holdings, in Infosys, in Pinduoduo as well, and some other Chinese companies. He did sell out of, well, I believe these are either Brazilian or Argentinian companies. We can actually see here the sectors that he's investing in. So industrials make up of 26.42%, energy 13.46%, materials 11.88%, and then consumer goods 10.23%. We can actually see the top 5, top 10. So number one is Torm PLC, reduced by 8%, but this is 26% of his portfolio. Then the next one, Expand Energy, Garrett Motion. I mean, you can clearly see where he puts his money in, and that's why the sectors of the portfolio look like this: industrial, energy, materials. No real, I mean, technology is barely 7.94%, right? If you look at the big tech companies that he's got, it's really not in the top 10 of his portfolio. And for those that are interested, the number one position here, Torm, is based in Copenhagen, Denmark. It's a shipping company that owns and operates product tankers. The company's product tankers carry refined oil products such as gasoline, jet fuel, naphtha, and diesel oil. Moving on to the super investor that is not really a super investor, just one that got famous once, and that's, of course, Michael Burry. So Michael Burry, we know he's been bullish on China for quite a long time, and he's been predicting the last 20,000 bear markets that did not happen. So in this quarter, he added 100% to JD, 66.6% to Baidu, 50% to Shift4, which was a new position in Q2, as you can see right here. Then he added 29% to Alibaba, 22.3% to Molina Healthcare, and the rest here, he did sell out of those two positions, Hudson Pacific Properties and BioAtla. So his portfolio is basically a portfolio with 8 positions and barely $83 million. I say barely because all the others are in the billions. So you can clearly see he's very bullish on China. 25.55% is Alibaba, then 24% is JD, 16% now already Shift4, and 15.85% is Baidu. So yeah, safe to say that 65% of his portfolio is China, so he's quite bullish on that. Will it work out? Remains to be seen. On Friday, by the way, before the market opens, Alibaba will report their quarterly figures. We're of course going to cover that on the channel. Up next, and this is a quick one because I already covered it in the Disney video today, and that's Nelson Peltz from Triumphant Management. You can see here he completely sold out of Walt Disney. All the rest, to be honest, not that interesting. Number 1 position here, still Janus Henderson Group. Number 2, GE Aerospace. Number 3, Wendy's Co., which makes sense. And then you've got all the rest here. He has 44.63% of his portfolio in financials, 21.47% in industrials, 13.74% in consumer discretionary, 12.78% healthcare, and 6.49% industrial goods. The rest are services, 0.9%, so barely anything. Up next, we've got Monish Pabrai from Pabrai Investments. So we've got a new company in the portfolio, that's Danaos Corp. He added 347.9% to Consol Energy. And of course, his portfolio, is materials, energy, and then financials and services. So the number 1 here, still the same, Alpha Metallurgical Resources. Number 2, Consol Energy. Number 3, Warrior Met Coal. He reduced Arch Resources by 92%, and then he bought Danaos Corp. Just a second on that one. I just want to show you one peculiar thing, shall I say. Arch Resources, yeah? Okay, Q3 reduced it by 92%. Q2, he added 179%. Q1, he reduced 40%. Q4 2023, he added 200.36%. Q3 2023, that was a new position in his portfolio. So yeah, it's been up and down, up and down. He's been treating this stock like, I'm not even going to mention that. With regards to Danaos Corporation, that's also a shipping company. It's one of the world's largest independent owners of container ships. Danaos Corporation is one of the largest independent owners of modern, large-size container ships. They charter their container ships on long-term contracts at fixed rates to many of the world's largest liner companies. This is a company with a market cap of $1.66 billion, apparently a PE of just 2.93, and a dividend yield close to 4%. Over the last 5 years, this stock is up 681%. Over the last year, it's up 27.39%. So maybe an interesting name to look at in a different video. Moving on to Dorsey Asset Management from Pat Dorsey. So we've got here some reductions, only one buy, AppLovin, and I think he made quite a lot of money on that because that stock has gone up and up and up and up and up. He also added 14.49% to Sprout Social, which was a new company he added here in Q2. Now, Pat Dorsey's portfolio has 12 stocks and a portfolio value of $927.6 million. The number 1 position is still Meta, then you've got AutoZone, Wix as number 3, and AppLovin is already in number 4 position in the portfolio, PayPal number 5, and he did reduce 2.88%. Come on, Pat, come on, help us out here a little bit. As for the sectors in his portfolio, so technology number 1, 54.8, industrials 11.9, consumer discretionary 10%, financials 9.78, services 7.32, and information technology 6.19. For those that don't know, I think I covered this last quarter as well. So Sprout Social is basically a social media management tool that helps brands communicate with consumers across social channels, collaborate across teams, and measure the effectiveness of their efforts. And if we look at their performance in the last year, it's down 46%, has a market cap of $1.64 billion. Moving on to Terry Smith from Fundsmith. So here as well, this is a very, very active portfolio. As you can clearly see, lots of activity in the last couple of quarters. A lot of reductions here as well. No new positions in his portfolio. Small adds across the board. Texas Instruments is the biggest one, 10% there. With regards to the reductions, we've seen small reductions in many companies, but nothing that's really shocking. So right now, still 40 stocks in the portfolio worth over $25 billion. The top positions are Microsoft, then Meta, Stryker Corp, Automatic Data Processing or ADP, Visa, Philip Morris, IDEX Laboratory, and then Waters Corp. And then you've got also Alphabet and all the rest. So, okay, pretty boring quarter, let's say. So nothing really to point out here. I mean, Philip Morris, he did reduce it by 17%, but other than that, nothing crazy. And now the last one is, of course, Warren Buffett, Berkshire Hathaway. You already know the big move. The big move, of course, is him selling another 25% or reducing his Apple stake by 25%. He also reduced the Ulta Beauty position by close to 100%, 96.4%. And remember, in Q2, this was a new position. And then with regards to the Sirius XM, the mergers or whatever, what's going on there, you can see here he sold 100% of those two tickers here and also reduced the main ticker, which is Siri. He did also reduce Bank of America by 22.7%, reduced new holdings by 19.31%, a tiny position in the portfolio. So I guess he's taking some gains, well, a lot of gains from that. And then two new companies enter the portfolio, Domino's Pizza and Pool Corp. Domino's Pizza, you know, from Domino's Pizza, the pizza. And then Pool Corp is a very interesting pick, especially right now. They basically, pool corporation. So everything in your backyard, pools and whatnot, that's what they do. And so if we look at the portfolio, 40 stocks, a portfolio value of $266.3 billion. Nothing changed here, basically. Nothing changed. Apple is still the number one position, although now just 26.24% of the portfolio. Then we've got American Express, Bank of America, Coca-Cola, Chevron, Occidental Petroleum, Moody's Corp, Kraft Heinz, Chubb Limited. That was the secret company that nobody would or should have known about because he was still accumulating, etc., etc. Sorry, it just didn't make any sense. I don't know how that was legal, but okay. And then you've got here all the rest. Domino's, 0.21% of the portfolio, and Pool just 0.06% of the portfolio. So very, very small. So overall, that's about it. That's the big overview for now. Maybe I'll do a separate video with Stanley Druckenmiller and see what he did during that quarter. Probably some others as well that are not available yet. So stay tuned for that. But let me know what you think about these moves down in the comment section below. Like, subscribe, do all of that. And I'll see you all in the next one. Bye-bye.